Hi and welcome to Penser Bank and our analyst presentation on Beijer Group. My name is Markus Almerud and I'm an analyst here at the bank. So Beijer Group is a leading manufacturer of routers, switches and industrial panels for demanding and harsh environments. We see almost 40% upside in the share. The reason for speaking today is that feedback is that it's getting somewhat easier to get hold of components which will drive sales. Today, I will touch upon order intake, the margin, and the volume leverage to come. So starting with the order intake, which is where everything starts, the company saw its 7th consecutive increase in orders in the second quarter, and yet again set a new record in absolute terms. Demand for its products continued to be strong across the board, and they're gaining market share. Sales, which have been lagging because of component shortage, are starting to catch up, even if sales in one of their business units, Westermo, are still suffering. Book-to-bill is still over 1.3 times on an annualized basis, so it's still a lot more to come in terms of catch-up. The worry has always been that the order intake will start suffering if the company is not able to ship the products ordered. It's not a quick fix. We saw that for instance, in Ford's profit warning the other day. But it seems as if the falling demand of consumer products will free some components, which will be positive. That brings us to the margin. So price increases are starting to materialize, and together with the volume increase, the margin in the second quarter expanded over 5 percentage points year on year and 110 basis points quarter on quarter. And especially impressive was the margin in Beijer Electronics, the other business unit, which reached a new all-time high as it got to almost 15%. And we think this illustrates well what is to come at Beijer. So as the order book is shipped, the margin will continue to rise, and as the component shortage abate, which it will, sales will accelerate and the leverage will start working. We see margins expand to 13% 2025 for the group, and this gives 60% EBIT CAGR over the next 5 years. And meanwhile, the market is not recognizing this momentum. 12-month forward PE is close to decade lows, and this is despite the obvious momentum in orders. So in summary, orders have continued to beat new records. Anecdotal evidence is that although still scarce, the component shortage is easing somewhat on the back of falling demand for consumer electronics, and sales keep catching up. This drives the margin, and all in all, we see 60% EBIT CAGR in the coming 5 years, and valuation is at decade lows. Thank you.